Welcome back to Travel Isn't Expensive. You are. My name is Jay, and today we're going to be looking at a question that I received on my Facebook a while ago that I'm just now getting to, just like last time. This should probably have been the first video in this series because it's talking about the credit score and the way that opening up many credit cards affects your credit score. But nevertheless, let's jump into it now. This question comes from Erik, a former boss of mine, one of many. So let's see what he has to say. How do you balance the benefit of account rewards against the negative hit on your credit score for excessive inquiries? Do you close out credit accounts when you have bled them for rewards, convert, and what is your credit score? So let's break this down like I imagine Erik does when the Bachelorette doesn't pick his man crush. First off, let's look at what is a credit score, and then we can see how it would be affected by opening multiple accounts. There are 6 factors to a credit score. The first factor is total accounts, how many lines of credit you have open at a time. So this is mortgages, credit cards, loans, car loans, student loans, all those sort of things fit into your total accounts. And this has a low impact designated by the green here. Number 2 is average age of accounts. So if you have 2 credit cards and one you opened up 1 year ago and one you opened up 2 years ago, your average age is of course 1.5 years. And this has a medium, you see how it changed to yellow? Medium impact on your, it's a visual help, medium impact on your credit score. Number 3, credit usage. What percentage of your total allowance, so say you have $50,000 that you can spend on 10 different credit cards, so the total lines of credit you have, what percentage of that are you using on a month-to-month basis? This has a high impact designated by the very red piece of paper I have. Number 4 is how many hard pulls do you have, which happens anytime you open up any sort of account, whether again, mortgage, car loan, credit card, all the above. Even some bank accounts will require a hard credit pull, and they stick around for 2 years before dropping off your credit report. This is a low impact credit factor. Number 5, we're getting there, derogatory marks. So this is bankruptcy or not late payments. That's the next one, little foreshadowing. This is if you're in collections or anything like that, any sort of derogatory marks, and this is a high impact credit factor. Last but not least, since this is definitely a high impact credit factor, we have late payments, your payment history. Have you been late on any of your credit card payments? Okay, that's the credit factor. Let's go back to the question. How do you balance the getting rewards basically versus the potential and possible and maybe hit on your credit score that you would get from opening up these credit cards? The answer is, I just do. I don't plan on buying a house or buying a car on credit or anything like that. My credit score does not need to be completely impeccable. How I think of my strategy when it comes to my credit score is I spend it, basically. Would I rather have a TransUnion score that's 20 points higher, or would I rather have $5,000 to $8,000 in travel savings? I think the answer is obvious which one I choose. Obviously, your Fico score is something you want to protect very closely. It goes into even some job interviews. It goes into a lot of decision making this day and age. Everything is wrapped up in your credit score. So obviously, I don't want to do anything to damage it, but am I willing to take a temporary dip, which is what happened to me, for massive benefits for my traveling lifestyle? Yes, I'm definitely willing to do that. Also, here's another point that people don't think about. Long before my credit score would drop appreciably, I would not be able to get a lot of these cards. These cards that I'm talking about are nice cards. These aren't like crappy cards that you just scrounge together, you get 20 of them and your credit score drops. These are like nice travel premium cards that you have to have a stellar credit score to get. Second part of the question is, do you close out the accounts once you're done with them, or how would you say it? Once you have bled them for rewards. Very violent, Erik. The answer is this one of my first credit cards? Is this one of my first, I'd say 4 or 5? Does it have an annual fee? If it does not have an annual fee and it is one of my first cards, definitely not closing it. Because any of your beginning of your credit history, those first couple of credit cards you have, or if you're an authorized user on a card, all of those are the bedrock. They're the basis, the foundation of your credit score. To close any of those would be to drop the average age of credit down appreciably. But is it a newer card and costly to keep that I was mostly just going for the initial sign-up bonus and then after that it becomes untenable? Yeah, I would downgrade it first, looking to product change it to a no annual fee version of the card or another version that I was allowed to downgrade it to, or I would close it, but I actually have not done that yet. I don't have that many cards, but I have not done that yet, although I am considering it with an Amex Hilton card. And the third part of the question, what is my credit score, is very personal. I'm not gonna give any numbers here, okay? About 3 or 4 years ago when I started looking into credit cards more seriously and maximizing the benefits of them, I already had a very good credit score because I had already had a credit card since I was 18, I think, and I was an authorized user of my mom's for the last 11, 12 years. So that helped me a lot in the beginning especially. If and when I'm a parent, I'm definitely going to be signing my kids up to be authorized users on my cards as soon as possible since it is such a big help. So after about 3.5 years and about 11 credit cards, my TransUnion score has dropped I think about 10 points, and my Fico score has remained almost the exact same. In the middle there was a dip when I opened up about 5 cards or 6 cards in 1 year, the first year. There was a dip, absolutely, and then if I was looking to buy a house right then and I didn't have a ton of money for a down payment, obviously that would have affected it. But it comes right back up. The score is very forgiving and comes right back up, as long as you are careful about these most high impact credit factors. I know I didn't really jump into any of these factors very specifically and in depth, but I wanted to give a general overview of what the credit score is and kind of my journey with it in its ups and downs. Please comment below any questions that you have. I really enjoy this format where people ask me. Often I don't really know what people know and what people don't. So it's helpful for me if you ask specific questions below and I'll get to them only like 6 months later. Okay, thank you guys for watching. I'll see you in the next video.